one of the reasons that I've seen in these 26 some odd years that I've worked in financial services or in the investment space is that it's really hard for an individual to actually have a diversified portfolio now the way that you used to be able to have it 26 years ago. Like you used to be able to invest in the S&P 500 and you kind of owned all different industries, all different size companies, and you were really well diversified. But you flash forward to now, the number of public companies is actually about 30% of what it was in the year 2000.
Welcome back to Pending and Trending. My guest today is Henry Yoshida, co-founder and CEO of Rocket Dollar. It is an IRA platform that gives investors the ability to use self-directed retirement accounts to invest in alternative assets, including real estate, private companies, and other opportunities beyond the traditional stock market. Thanks so much for joining us today, Henry.
Thank you, Deidre. Thanks for having me.
So you have basically an IRA platform after seeing the traditional financial world from the inside. Why did you realize or believe that investors needed this platform, and what made you create it?
I saw it from both sides. So I did work in traditional financial services for a long time, Deidre, and I focused primarily on 401k accounts and IRAs. So I've always been around these sort of tax advantaged accounts, and those types of accounts, we were always told just to put a little bit of money away through our payroll, invest them in broad mutual funds, and then just kind of wait 30 years and hope for the best, right? The account should be okay. And for most of history, to be fair, it kind of has been. But after I'd sort of sold my last financial company, I started meeting a lot of folks who worked in areas like private equity, alternative investments, venture, and so forth. And what it made me realize that actually a lot of average Americans didn't have a problem accessing these investments in 2016. Those opportunities were there. People were starting to hear about like a private deal here and there. So it wasn't access as much as it was capital. So that's when I started realizing that what I know in my background about IRAs and 401ks and tapping into those funds and allowing people to use that capital is actually what the world really needed. It was a capital constraint, not a access constraint, and not for everybody, but that's kind of what the genesis for Rocket Dollar was. And I learned that after I sold my last business. It was called Honest Dollar to a big publicly traded financial services firm, and that was in 2016. And then in 2018, I launched Rocket Dollar, which, as you mentioned, Deidre, allows people to take their tax advantage monies, keep the same tax treatment, but instead of stocks, bonds, and mutual funds, they could buy private and alternative investments, including real estate, your specialization.
That's great. That's great. So, can you just explain to our listeners who may not really understand what a self-directed IRA is and they put everything
Sure.
into their Wall Street account? Can you just give us a brief explanation of that?
Sure. Self-directed IRAs, it's not a great term because in a way, a lot of people in their regular IRAs through Wall Street brokerage firms can decide what stocks to buy and sell or mutual funds to buy and sell and hold inside of those accounts. So they're kind of directing it themselves. But self-directed IRA is an industry term that's specific to an IRA account that allows individuals to have an IRA with a provider like Rocket Dollar that specializes in letting people hold private, non-registered, non-public investments. Maybe just to give some examples, that could be you could join a real estate syndication. You could buy a rental property as an investment inside of an IRA account. You could make a small purchase or an angel investment or an investment in the stock of a privately held company. So an example would be that up until, I guess, a week and a half ago, SpaceX was a privately held company for 16 years. And then all of a sudden went IPO and went public. So people could purchase shares in a privately held company using a self-directed IRA like the ones from Rocket Dollar. And that's the difference. So just the difference is just that self-directed IRAs allow you to buy private, non-registered, non-public investments. Regular IRAs, for the most part, because of the companies who offer them, only allow you to buy stocks, bonds, and mutual funds because that's all they allow you to purchase.
Right. So, why should high earning professionals move their retirement funds, per se, out of
Sure.
the traditional accounts that we're used to hearing about to alternative places?
Sure. I mean, I think it's a diversification play more than anything else. I mean, I've been in and around just traditional financial services since the year 2020. So I graduated college. I've worked, it's kind of interesting, but I started at Merrill Lynch right after college, and I ended up getting into a division that was focusing on 401ks and IRA accounts. So 26 years later, I'm still kind of working in the same part of financial services. So I like to tell people that really I'm a mile deep, a mile deep and only an inch wide in terms of my specialization. But the one of the reasons that I've seen in these 26 some odd years that I've worked in financial services or in the investment space is that the it's really hard for an individual to actually have a diversified portfolio now the way that you used to be able to have it 26 years ago. Like you used to be able to invest in the S&P 500 and you kind of owned all different industries, all different size companies, and you were really well diversified. But you flash forward to now, the number of public companies is actually about 30% of what it was in the year 2000. So despite hearing about a big IPO in the last couple of weeks, I mean, there's actually far less companies that are publicly traded. And now companies will wait till they're very large to go IPO versus up until the 1990s, companies like Amazon went public when they were only doing 20, 30, 40 million dollars in revenue annually. And just to give you a sense, I mean, probably in the time you did your intro, Amazon might have made $50 million in sales in the 5 seconds it took you to introduce my name more than anything else. So the reason why you might look at having alternative investments as a retail investor now is just for pure diversification purposes, because those returns that you used to be able to get by getting into companies like an Amazon or Google early really don't exist anymore, because those companies don't need to go public until they're very large, is what you're seeing today. And if nothing else, I mean, I've kind of focused on stocks and companies, but I got to think that owning or having the ability to own investment real estate as a part of your portfolio of stocks, bonds, mutual funds that you could hold in IRAs and brokerage accounts is just a good diversification play. So you have the ability to have some investments that'll work in certain times, maybe when the stock market isn't working, and real estate may not be working at times when the stock market is working, and so forth. So it's a diversification play that's able to be created by moving money into these self-directed accounts.
And can you walk walk the listeners through the actual mechanics of doing this through your site?
Sure. So the actual mechanics, so I'll kind of break this up into two parts, but one is that when we started Rocket Dollar, self-directed IRAs were really not as, I guess you could say, user-friendly or technologically advanced as what we come to know for regular investment accounts. The expectation now, and it was the same way in 2018 when we started, is that you can go to a website and you can sign up for an investment account, a bank account, or some new account online. But that didn't really exist in the self-directed space. So at Rocket Dollar, my goal was to basically replicate the ease and use and the user interface of creating an IRA in an online platform. So when users want to create an account, they could go to the website at rocketdollar.com, and it's a normal process where they'd give name, address, personally identifiable information, anything that you'd expect to hand over or provide to open an investment account. And then you do an ID verification like you do with your investment accounts, so Deidre can prove that Deidre is Deidre, and so forth. So that's step one, opening the account. But as far as actually investing the funds, the difference here is that all of our customers kind of have an investment idea that they want to do in the private space. So let's say that they've heard about a real estate syndication opportunity that is pooling capital to go into a self-storage facility outside of the greater Philadelphia area where you're based. Or it's someone who wants to buy a single family investment property in the greater metropolitan Austin area where I'm based. So they already know the private deal that they want to do. What they're trying to do is tap in and use a portion of funds they already have in accumulated IRAs and 401ks by opening a new IRA at Rocket Dollar, transferring funds into this newly created account, and then making that investment. So think of us as less of you go to our website and then decide what type of investment you want to do. We're a website that allows you to access the capital that you already have to go do a deal that you know about that just happens to not be a stock bond or mutual fund, in the hopes that having this investment will work as a part of your overall portfolio and help you get more diversified.
It's a great explanation.
Yeah, thank you.
So, how does that work in practice, you said you're taking it from other investment accounts. Are you contributing to that as well to reduce taxes at that point? How's that
You
working?
could do both, but the actual ability to contribute monies in large amounts are pretty limited in IRAs. So if you're an individual in the United States under the age of 50 years old, you can only do $7,500 per year. So it's going to take a long time for you to start an account from zero and accumulate enough to buy an investment property, which is maybe at that point, if you're a younger investor or someone new, it might make sense to open these traditional IRA accounts at a Wall Street brokerage firm and then just start purchasing $100 of a mutual fund or $500 of a mutual fund every month, knowing that you can only put 7,500. And even in a 401k, the only ways you can put money into that, your current retirement plan at your company, is through a deduction of your payroll, right? Going into that. And that's also limited to roughly $24,000 if you're under the age of 50 this year. So the majority of people, when they open a new IRA, you are eligible to roll or transfer money from an old 401k or an existing IRA into the new IRA. So if you have, let's say, $300,000 in an IRA at Fidelity, and that IRA was created not because you put $7,500 in per year for the last 20 years, but it was actually created because you spent 15 years working at a company and you contributed through your payroll, and the company hopefully gave you match and you had investment growth. It's now worth 300. You moved that 401k to an IRA when you left that job, and now you want to split that IRA in half, 150 and 150 at a place like Rocket Dollar. You would open the Rocket Dollar account, transfer $150,000 of the cash, but since they're the same type of account, there's no tax consequences, because that's the number one question I get. It's a like kind account, but now you have $150,000 to go do a private investment. So you could go buy a condo as an investment property, maybe not so much in the Philadelphia or Austin area, but a lot of our investors or a lot of our customers actually will open accounts and then buy a property that maybe is in a lower cost area of the country for investment purposes and so forth.
Right.
So I wish there were 150,000 condos, but there probably aren't that many in Austin or Philadelphia at this point.
Yeah, we don't have too many of those these
Right.
days. However, at one point, way back when, if I had invested in those over the years, it would have been a good move, right?
Right.
The
And the crazy thing to think about is that the way back when probably wasn't even like 40 years ago. I mean, in 2010, 15, there might have been like great opportunities. I feel old when my kids tell me about these classic songs and they'll tell me about songs that were in the early 2000s. And then I start feeling older and older every day.
our kids do that to us, don't they?
Right. They have a way of like just all of a sudden gut punching you with a thing that really makes you feel old.
They do. They sure do. So, what common administrative hurdles should investors prepare for when they are working through these accounts?
So I think the administrative hurdle, and so maybe the practical ones, let's start with that. But first and foremost, private and alternative investments are typically higher ticket amounts. The purchase price to make this investment is usually higher, and they're typically long term, and they're typically not very tax friendly, which all three of those characteristics actually lend themselves pretty well for being held inside of an IRA. So that's just maybe more the practical, that tapping into these existing IRA or 401k funds to make private and alternative investments aligns a lot of the characteristics that would be defined as maybe not so great about private and alternative investments. So not great liquidity, investments designed for the long run, not very tax friendly, and then high dollar amount to get in. But in an IRA, clearly both of us look like we're in our late 20s, early 30s. So we have decades before we can even access these accounts without a penalty from the IRS. So IRA money that we have is really, for the most part, it's defined as long term right now, just because we can't access it until we're 59 and a half. But from an administrative standpoint of owning a private investment inside or making that investment, it is a little more difficult. It's not just you deciding that you want to buy $100 of some mutual fund and hitting a button and making that purchase, but you have to actually know the particular private investment you want to make. There may be documents that you need to sign or look at to commit to making a $25,000 investment into the syndication. But for the most part, if you're someone who has made any sort of private investment, whether that's outside of an IRA, the process is pretty similar for doing the same thing inside of an IRA as well. I think administratively, it's not different from how you've made private investments before, but just understand that there are other complexities, but usually the person that you're going to be giving the money to for that investment, the private investment, they're going to have a process that they'll tell you. The only difference if you're using a Rocket Dollar IRA is that you're going to be using funds from your IRA as opposed to just writing a check from your bank account. All the administrative additional things are not an additional thing because it's an IRA. It's just an administratively additional thing because it's a private investment versus a public stock purchase.
Right. Now, what would be a common mistake that can jeopardize an investor's tax advantage status?
So, especially since your field is real estate, Deidre, I'd probably say that IRAs and just all investments in general using an IRA account, so even if it's a stock or a mutual fund, they always have to be an arm's length transaction. So there's a category that the IRS defines as called prohibited transactions. And I know that's kind of a long word and some nomenclature, but let me back up. So when I say it's an arm's length transaction, if you're using IRA funds, you really need to understand that there can't be a conflict of interest and you can't be directly involved in this investment. So in stocks, that's why the brokerage firm that you have your account with, the Wall Street brokerage firm, has to ask you if you are the CEO or on the board of directors of SpaceX. For example, if you want to buy that stock, you're going to have to certify that you are not an insider, an executive, or one of their investment bankers or their accountants who do their audit and so forth. So that philosophy is very similar in private investments, except that the odds of you answering in the affirmative to those questions are much higher. So let's say, for example, you want to buy that investment property that we talked about a couple minutes ago, that you can buy that property, but it has to be a bona fide investment only for you. So in other words, you can't buy a condo that you may use every now and then you rent out partially. So, and then you use it personally. So you can't do both if you're using IRA funds. Now, if you want to buy an investment property, and you probably know these rules better than me, using cash, then you probably within some rules as well, some different set of rules, can decide to use it a couple weeks of the year on your own, and then the rest of the year it's an investment for you. But in an IRA, it has to clearly just be an investment. So continuing with this philosophy, another one is that you cannot buy that property and then rent it to a direct lineal relative of yours. So you can't rent it to your daughter or your brother or your father, for example. So someone who's a direct lineal relative of yours, because the thinking is that you probably wouldn't be too apt to evict them if things didn't go right from collecting the rent. And you might also be inclined to give them a deal on said rent rate too versus the market. So there's the potential for that sort of breaking that seal of it being completely separated as an investment from you. So those are the things to kind of keep in mind. And rather than me kind of giving all the IRS rules and details for their prohibited transaction, I think that people, if they just use kind of common sense, that if I'm buying this stock at a Wall Street brokerage firm and I happen to be the CEO of the company, do I have control, outsized control over how this stock may perform? The answer is yes. If I buy rental property using a Rocket Dollar self-directed IRA, am I really operating this as a bona fide arm's length, no conflict of interest investment? And for the most part, if you're not renting it to a direct relative, you have actual tenants, you operate it under a lease, and it's a business transaction. You have no personal ties to that tenant other than the relationship of tenant to landlord, then you're probably okay. And you don't use it yourself when it's convenient for you to want to stay in that house yourself, so forth.
Right.
I think just keep in mind the philosophy more than maybe the details is easier.
That's great information. So what's the single piece of advice that you have for accelerating someone's journey on the financial freedom road?
I think that right now, I think it is thinking about your own personal portfolio the way that these large institutions and the really rich people have always done it. We didn't get into this earlier, but in addition to the number of publicly traded stocks actually just cutting to 1/3 of what it was even 20, 25 years ago, I mean, if you're in public stocks only right now, a lot of these earnings and growth are being driven by probably the top 10 companies, almost dominated by technology at this point, right? So for you to properly diversify, you need to do what institutions, endowments, and wealthy individuals and ultra high net worth. So this is defined as people with 10 million and 50 million or $25 million portfolios and higher. They're not doing the same things, and they weren't 20 years ago that the average American person was doing. At the end of the day, they were probably always invested about 20 to 40% or maybe 10 to 40% in something that is not a public investment, like a stock bond or mutual fund. And it was a true institutional portfolio. So I think that now technology has gotten us to the point where we can go and make these private investments to become a portion of our portfolio and ballast against the stocks that we should all have, because that's a very important component of an investment portfolio as well. But try to think, if you're trying to create wealth and financial freedom for yourself, I think you need to replicate what institutional savvy, ultra high net worth people have always done. So an example, Deidre, would be that you typically find that your very high income earners don't just rely on one type of investment. I mean, you find that they actually hire someone like you and they develop a real estate portfolio in addition to their stock and mutual fund portfolio, right? I mean, that's what you do. You start to diversify as your wealth grows. And I think that people can do this now, not when they reach $10 million, but they can start doing it when they have $250,000 in investable assets. Right. And I think that's the key, right, is basically not having all your eggs in one basket, and maybe having your basket replicate some of the most sophisticated investors in history.
That's right. That's right. I like that. Replicate what they're doing, right? So I understand that you have a special promotion for our listeners today. Would you like to share that?
Sure, yeah. So the way, and we didn't talk about this, but since our platform doesn't really recommend or manage investments for folks, our customers are self-directed, so they find these investments on their own or with the help of an investor-focused real estate agent, if that's the route they go into. But because of that, we don't charge for any of the assets that are on our platform. So we currently custody a little over $11 billion in assets. Roughly $3 billion is in direct real estate, so it's actually a major asset class for us among our IRA customers. But our pricing model for Rocket Dollar is that we do a one-time sign-up fee, and then we do a monthly charge, a maintenance fee, just to maintain the IRA structure of the account. I wanted to mention that first, that the promotion that we made, and we decided just to use Deidre Quinn, just the code Deidre Quinn 300. So they would just take $300 off of the sign up. There's 3 different levels of our IRA accounts, and you can talk to us at the website. So I mentioned that we're a digital platform, but one of the things that we have prominently displayed in the upper right-hand part of our website is the phone number 855-ROCKET-D or 855-762-5383. And at that number, during business hours, one of our IRA specialists, and sometimes me, I take a shift once a week as well, we actually answer phones and talk to people, not to sell the accounts, but just to answer questions and get into more details about some of the questions you've asked me about. How do these accounts work? How do they work administratively? Is it right for me? Can I do this type of investment? Maybe just ask about scenarios. But using the code Deidre Quinn 300 will give $300 off of the sign up, regardless of which of the tiers of our account types works for you in your own personal situation, and so forth.
Well, that's fabulous. Thank you so much for offering that to our listeners. Here we get a platform, but we also can pick up the phone and talk to a real person. That's absolutely wonderful.
Yeah, and we're there all the time kind of answering calls. If we miss the call, then just leave a message because it means we're on the line, but that happens more and more. But we've just found that people's situations are unique, and it's just harder to answer broadly by just answering the frequently asked questions. People want to know about their own specific situations. And at this point, with tens of thousands of customers, over $11 billion, we've kind of seen a lot of different types of investments. And the types of people we have are just what we had described, which is people who have saved money in the traditional Wall Street IRAs, which formerly were 401ks. And now it's gotten to the point where they realize that this is a large sum of money right now, and I have it all riding on 7 stocks of the S&P 500. Maybe I should think about doing something else. And what we found with self-directed IRAs is it's a kind of, it used the word freedom earlier, but it's freedom to invest in something that you may know better than anyone else. So I wouldn't even begin to know where to buy a property in Philadelphia. But if I'm also a consultant in XYZ industry, I also wouldn't know the up and coming companies in that space either to look at making a private company investment and so forth. I just read too that SpaceX is an example of a company that went public, but they raised $85 billion in cash on last Friday, and they made a commitment to purchase some other AI startup in cash that was started in the year 2020 for $60 billion in cash. And the three guys who started it are each going to be multi-billionaires, and none of them are over the age of 25. So,
Wow.
yeah, I don't know.
Food for thought.
I don't know who these guys are, but they don't get the code. So,
They don't get the code. Is there any last thing you'd like to share with our listeners before we sign off?
yeah. So I think one thing I'd say right now is that the way I think about it, we're in 2026 and we're already almost halfway through the year, so it's kind of hard to fathom. But I think that when you get to the year 2036, I think that you're going to have a world where it's much more common for people, for regular retail investors, to be holding something, be holding investments that are not just public stocks, bonds, and mutual funds. Like I think right now, among your circle of friends or people you have friends who would own a rental property and so forth, but usually like a 1 in 5 or like a 1 in 10, unless you're hanging out in a real estate networking group. But I think that number is going to be percentage is going to be a lot higher in 10 years. People will seek to find returns and growth and investments outside of the stock market. In other words, it won't be what 90% of people with investments invest in. It's going to be what 50% of people with investments invest in, and then 50% will be something else.
Yeah, I can't agree more. And I think from our listener standpoint, the message that we hear week over week is really in line with that. So
Right.
it's
And you'd be surprised. People
so
have their own unique pockets of knowledge that, I mean, the investments we see across our platform are things that I didn't even know that people could invest in some of these things before, but people have made very high returns. And we've had people bet on early stage companies that would then get acquired by much bigger ones or actually go public themselves. We had, people who own SpaceX privately and other companies that will probably IPO later this year in the AI space. But then we have people who are in different pockets of the country and they find these great real estate investment syndications or properties in just different parts of the country that I have no clue where to even begin investing.
right. Yeah. Wow, that's great. I want to thank you, Henry, for sharing all of your knowledge with us today and for being on.
Yeah.
I really appreciate the conversation. It's
Thank
been
you.
great.
Thank you.
Thanks so much for being on with us today, Henry. One of the biggest takeaways from this conversation is that building wealth doesn't always mean following the exact same path everyone else is taking. Understanding your options, diversifying your investments, and thinking beyond traditional retirement strategies can open doors investors never realize. If you would like to learn more about Rocket Dollar, be sure to visit their website at rocketdollar.com and use the special code Deidre Quinn 300 for additional savings on setup. Listeners, thank you for joining us on another episode of Pending and Trending. If you found value in today's conversation, please subscribe, share this episode, and leave us a review. If this episode was helpful, check out the next episodes of Pending and Trending for more real conversations around building wealth and financial freedom.